Every generation has its turning point, the moment when the rules of wealth creation change forever. For our parents, it was the internet. For us, it's happening right now. The world is entering a financial transformation so massive that by 2026, the way people invest, earn, and grow their wealth will look nothing like it does today. The question is, will you adapt or will you be left behind? For decades, investing followed a familiar rhythm: stocks, bonds, real estate, diversification, and patience. But that rhythm is breaking. Technology, data, and global accessibility are rewriting the tempo. We're no longer living in a world where investing is about owning pieces of companies. We're entering an age where investors can own fractions of entire systems, digital, automated, and borderless. This is not evolution, it's reinvention. Right now, massive forces are converging: artificial intelligence, blockchain, green energy, and digital ownership. Each of them alone could reshape entire industries, but combined, they're creating a storm of opportunity. And as with every major shift in history, 90 of people will only realize what happened after it's too late. They'll read about the fortunes others made in articles, wondering how they missed the signs that were right in front of them. Let's be clear, this isn't about hype or predictions. It's about patterns. History shows us that wealth always moves toward innovation. In the 1990s, those who believed in the internet became millionaires. In the 2010s, those who saw the power of smartphones, e-commerce, and social media built empires. And in 2026, we're standing at the edge of the next great wealth migration, one powered by intelligence, decentralization, and sustainability. But most people are still investing like it's 2010. They rely on outdated strategies, ignore emerging technologies, and assume the market will behave the same way it always has. That's the biggest financial mistake of all, believing that stability equals safety. In reality, stability breeds complacency, and complacency kills opportunity. The future belongs to the investors who can recognize change before it becomes obvious. Here's what's different about the next wave. It's not just about making money, it's about alignment. The investors who win in 2026 will understand where the world is heading toward automation, data-driven decisions, and sustainable innovation. Those who cling to old systems will be swept away by the ones building new ones. It's not about chasing trends, it's about anticipating them. Think about it, the greatest investors of every era shared one trait: vision. They saw patterns others ignored, they acted while others hesitated, and they prepared before the crowd realized there was even a race. 2026 will reward that same mindset. Because right now, the world isn't just changing, it's accelerating. In this video, we're going to break down the 5 investment trends that will dominate 2026 and beyond. You'll see how artificial intelligence, tokenization, sustainability, and other rising forces are rewriting the global economy, and how you can position yourself before the crowd catches on. Each trend isn't just a concept, it's a roadmap for the next generation of wealth builders. Before we dive in, I want you to ask yourself, when the next big shift hits, will you be reacting already? Because the future isn't waiting, it's already here, and the clock is ticking. If you're serious about preparing for the new era of investing, make sure to subscribe, hit the like button, and stay until the end. The knowledge you gain today could be the foundation of your financial freedom tomorrow. Artificial intelligence isn't coming to finance, it's already here. But what's about to happen between now and 2026 will completely redefine how money is managed, traded, and multiplied. AI is no longer a futuristic concept or a Silicon Valley toy. It has become the engine driving the next generation of financial intelligence. Those who understand how to use it will see opportunities that the human mind simply can't detect fast enough. Let's start with the basics. For decades, investors relied on human intuition and historical data. Analysts pored over spreadsheets, watching for trends and anomalies. But AI does what no human can. It processes millions of data points per second across thousands of markets, learning and adapting in real time. That means it doesn't just react to the market, it anticipates it. It learns from every mistake and never repeats it twice. Take an example from reality. Renaissance Technologies, one of the most secretive and profitable hedge funds in history, has used AI and machine learning for years to dominate markets. Its Medallion Fund has produced average annual returns of over 60 before fees, something no human-driven fund has ever matched. Today, similar technology is becoming accessible to individual investors through AI-powered trading platforms and robo-advisors. What was once reserved for billion-dollar institutions is now available on your smartphone. But there's a trap. The biggest mistake people make when they hear AI investing is thinking it means set it and forget it. They assume technology replaces thinking. That's wrong. AI doesn't replace human intelligence, it amplifies it. The best investors of 2026 won't just use AI tools, they'll understand how those tools think. They'll know when to trust the data, when to question it, and how to integrate it into a larger strategy. Imagine this AI is like a financial co-pilot. It can tell you when a market is overheated, when sentiment is shifting, and when your portfolio is misaligned with your goals. But you're still the pilot. You still decide where to go. The key is partnership, human intuition, guided by machine precision. Together, they form a superpower the financial world has never seen before. The rise of AI also creates a new type of investor, the augmented investor. This person isn't competing against algorithms, they're working with them. They use predictive analytics to spot hidden patterns in emerging markets. They understand natural language processing tools that analyze global news in seconds, identifying economic signals before headlines even form. In this new world, speed and information are everything, and AI gives both in abundance. But here's the ethical and practical twist. The more people rely on automation without understanding it, the more they become slaves to it. If you don't understand how the algorithm thinks, you're not investing, you're guessing. The true winners will be the ones who stay curious, who learn how to interpret AI-driven insights instead of blindly following them. Knowledge, not code, remains the ultimate advantage. Think about the future. By 2026, financial AI will integrate seamlessly into personal banking, investment management, and even tax optimization. Your financial assistant won't just help you track expenses, it will predict them, optimize your investments automatically, and suggest real-time adjustments based on global market changes. The investor who resists this evolution will fall behind, while the one who adapts will experience a level of efficiency and precision never seen before. So ask yourself, are you learning to master AI or waiting for it to master you? Because by the time most people realize that algorithms are controlling the flow of global wealth, the early adopters will already own the game. The next part will reveal how another unstoppable force, tokenization, is about to open the floodgates of global ownership and turn traditional investing upside down. Imagine owning a fraction of a Manhattan skyscraper, a Picasso painting, or a stake in a renewable energy project in another country without middlemen, paperwork, or borders. That's the power of tokenization, and it's about to redefine what it means to own something in the global economy. By 2026, digital ownership through blockchain technology won't just be a niche trend, it will be a trillion-dollar revolution. At its core, tokenization transforms real-world assets into digital tokens on a blockchain. These tokens represent ownership, share value, or rights tied to physical or digital assets, real estate, stocks, art, music, or even carbon credits. It's the merging of finance and technology, creating an ecosystem where liquidity, accessibility, and transparency become the new financial standards. Let's look at how massive this shift is becoming. BlackRock, the largest asset manager in the world, recently announced its move toward tokenizing trillions in assets. Institutions like JP Morgan and Citigroup are building private blockchain systems to handle real-time settlements using digital tokens. Even governments are experimenting with tokenized bonds and national currencies. The infrastructure is already being built quietly and quickly beneath the surface of traditional finance, but most retail investors still haven't noticed. They're focused on stock tickers while the foundation of finance is being rewritten. That's the first mistake, confusing familiarity with safety. Tokenization removes the barriers that kept wealth locked inside institutions. For the first time in history, a student in Brazil could own a piece of real estate in London, or an investor in Kenya could hold a stake in a renewable energy plant in Germany, all with a few clicks. Global ownership is no longer a dream, it's becoming default. Here's where it gets powerful. Tokenization also introduces fractional ownership. Instead of needing $500,000 to buy an investment property, you could own one of it for a few $100s. This doesn't just democratize access, it multiplies liquidity. Assets that were once static, like real estate or fine art, can now flow through markets like stocks. This new liquidity will unlock dormant wealth and create entirely new asset classes. However, as with every revolution, the opportunity is matched by risk. Many investors are making the same error they made with crypto, chasing hype without understanding fundamentals. They jump into tokenized assets without verifying the legitimacy of the underlying project. In this new world, due diligence becomes more important than ever. You're not just investing in tokens, you're investing in the trust behind them. Transparency is one of the most transformative aspects of tokenization. Every transaction, every transfer, and every fractional share can be verified instantly on the blockchain. Corruption, manipulation, and hidden fees become harder to hide. That means power shifts away from centralized institutions and toward the individual investor. Ownership becomes programmable, secure, and fluid. The implications go far beyond finance. Tokenization is set to reshape industries from real estate to entertainment. Imagine music artists issuing tokenized royalties directly to fans, or movie studios funding projects through fractional token ownership. Every economic interaction, property, contracts, art, or ideas could become a tradable digital asset. This is the true meaning of the digital ownership revolution. By 2026, tokenized markets are projected to exceed 16 trillion, according to major financial research firms. That's not speculation, it's the next phase of globalization. The investors who recognize this early will not only profit financially, but will also position themselves as pioneers in a borderless economy. So how do you prepare? Learn the language of blockchain. Understand how tokenized assets work, and don't fear digital ownership, embrace it. The barriers to global wealth are collapsing, and the next opportunity isn't locked in a vault, it's stored on a blockchain. The next section will reveal another unstoppable trend that ties directly into this transformation: sustainable and green investing, the trillion-dollar force driving the future of wealth. There's a quiet revolution happening, one that's not driven by speculation or hype, but by necessity. Climate change, energy transition, and environmental accountability are no longer political debates, they're economic realities. And the investors who understand this shift will find themselves at the forefront of the next trillion-dollar wave. Sustainable and green tech investing isn't just about saving the planet anymore, it's about building the future economy. Over the past decade, the world has realized something profound. Sustainability is profitability. Clean energy, electric vehicles, circular manufacturing, and carbon capture technologies are no longer niche ideas, they're the foundation of new empires. By 2026, global investment in green technology is expected to surpass 5 trillion. Nations, corporations, and individual investors are all racing to position themselves before the transformation reaches full speed. Think about Tesla's story. It wasn't simply a car company, it was an energy revolution disguised as one. Early investors didn't just bet on vehicles, they bet on a new energy paradigm. Today, similar opportunities are emerging in solar innovation, battery recycling, smart grids, and sustainable agriculture. Companies developing efficient storage solutions or zero-emission materials are quietly becoming the new titans of industry. The mistake many investors make is assuming sustainability is just a moral movement. In truth, it's a financial one. Governments around the world are enforcing carbon taxes, banning fossil fuel incentives, and investing billions in green infrastructure. This means companies that fail to adapt will bleed cash, while those aligned with the new model will thrive. It forces investors to think long-term, to see profit and purpose as allies instead of enemies. The richest people of the next decade won't just measure wealth in dollars, they'll measure it in impact, resilience, and relevance. Investing sustainably is no longer charity, it's strategic foresight. By 2026, sustainability will dominate portfolios, not because it's popular, but because it's inevitable. Every nation, institution, and consumer is pivoting toward longevity, and capital always follows momentum. If you can recognize this flow and align with it early, you won't just ride the wave, you'll own part of the ocean. So, ask yourself, are your investments aligned with where the world is heading or where it's been? Because the green economy isn't the next big thing, it is the big thing. And as we move into the conclusion, we'll bring together everything you've learned: AI, tokenization, sustainability, into a clear plan for how to position yourself before 2026 transforms from opportunity into history. Every major shift in history rewards the few who act before the world catches on. You've just seen how artificial intelligence, tokenization, and sustainability are rewriting the rules of wealth. And by 2026, these trends will merge into one unstoppable force. But here's the truth: knowing these trends isn't enough. What you do between now and then will determine whether you're a spectator or a participant in the next great financial revolution. The first step is clarity. Define your investment strategy around long-term conviction, not short-term excitement. Most people lose money not because they choose bad investments, but because they lack consistency. They chase every trend, react to every headline, and abandon every plan the moment volatility hits. The wealthiest investors, by contrast, think in decades. They understand that every dip, correction, and panic is simply a transfer of wealth from the impatient to the patient. Next, structure your portfolio for adaptability. We're entering a hybrid era where technology-driven assets, sustainable industries, and digital ownership coexist. That means diversification must evolve. It's no longer just stocks and bonds, it's AI infrastructure, blockchain platforms, clean energy companies, and tokenized real estate. Build exposure to innovation without overextending. The goal isn't to gamble, it's to position. Now let's address the biggest misconception about the coming boom: that you need a lot of money to participate. You don't. What you need is awareness, discipline, and education. Start small but smart. Automate your investments, reinvest your gains. Focus on learning tools like AI-driven analytics and digital asset platforms. The earlier you start building habits aligned with the new economy, the faster you compound, not just wealth, but wisdom. Here's a practical exercise list: every hour you spend consuming content, and replace half of it with financial learning. Read about emerging markets, understand how tokenization platforms operate, follow sustainability indexes. The investors of 2026 won't be the ones who got lucky, they'll be the ones who prepared quietly while everyone else was distracted. The future doesn't belong to the smartest or richest, it belongs to the most prepared. Let's not forget the emotional side. Investing in this new age requires mental strength. There will be noise, uncertainty, and constant change. But every disruption hides opportunity. Fear is a signal not to run, but to research. Curiosity is your compass. When others panic, ask questions. When they doubt, dig deeper. Remember, the same fear that keeps most people out of the market is what makes wealth possible for those who dare to enter. So, how do you position yourself for the 2026 boom? You start now. Learn how AI is reshaping finance. Understand tokenization and the infrastructure behind it. Embrace sustainable investing. Build systems that automate your discipline. Surround yourself with people who think long-term and never stop refining your strategy. Every day is a chance to prepare for the biggest wealth shift of our generation. The coming years will define who adapts and who gets left behind. Don't wait for permission. Don't wait for certainty. The world won't send you an invitation, it will simply move on. 2026 will belong to those who saw the patterns early, trusted their preparation, and acted decisively. If this video gave you new insight, don't let it end here. Subscribe to the channel, hit the like button, and share this video with someone who needs to hear it. Comment below what trend you believe will define your financial future. Because the future isn't something we wait for, it's something we build, starting today.